you, Scott. For those unaware, we got a little running inside joke that Scott always loves jumping on right when we're about to start doing some interviews here. So even when they are scheduled, but we digress. So
it's a gift, Gav.
It is a gift. You're really good at it. But we're going to call Robin, and Scott, obviously, if you got any input on any of these names, by all means. But Rob, are you with us here?
Yes, can you hear me?
Yeah, I can hear you just fine. So everybody hopefully should be aware of who Robert is. He's the Briefing and Play Plus Services Senior Equity Analyst, and does a lot of yeoman work for us over there, puts together the Grow X list, the yield list, any other lists there that you're in charge of, Robert, that I'm missing there?
Well, I do the yield leaders on Friday and the other one on Wednesday, and I do story stocks every day, and do like the plus commentary every day. Does that kind of just a variety of different things.
Yeah, and Scott and I have really been pointing out those follow-up stories that yourself, Craig, and Dennis have been doing, and really good work, and really educates people on the fundamentals around the stock, which is important to understand. They're nice, quick reads, so I highly recommend keeping an eye out on those pieces as they come about. But
and you can set the just people know they can set the Fundex ticker if they want to get alerts on those. Just FYI. But anyway, go ahead.
Robert, before we break into this, any key themes that you're seeing coming out and about? I know a couple of weeks ago you were in on some of the home building themes, and just curious in your travels putting together the Grow X the last few weeks, or the yield, has there been any themes that you've noticed out there?
The home decor stocks were weak in the fourth quarter, and they did really strong in the first quarter, but then there were a couple that had a bit of a stumble. Then I was surprised when RH came in with a huge number when they reported earnings. So it's kind of a mixed bag at this point.
That knocked me over too.
Yeah, I was surprised because all the other home decor stocks were doing really bad. So I was shocked. RH did a great job. Maybe they do tend to cater more towards the real high end customers. So maybe they're not being as impacted by things. So that might be why.
Saved by income inequality.
Yeah, something like that.
All right, Robert. Well, you've got a couple of additions to the Grow X list that we were going to jump into and talk about. The first one is CIEN, ticker symbol CIEN. They're, of course, a network supplier, and coming off a pretty solid earnings report here. What is it, about 2 weeks ago? But you want to break down CIEN a little bit and tell us what it is you like about it?
Yeah, sure. What they do is they do like telecom and networking equipment, and most of their customers are telco customers, but they have been kind of doing more. They're basically trying to build up their non-telco business because telecom can be kind of boom bust, and they just kind of want to diversify into other areas. So a big area they're going into is called web scale, which is sort of like internet search, online video. So it's kind of like a data center kind of play. So they're definitely getting more into that, and I tell you, they put up a really impressive quarter in early June. Going into it, a lot of people were scared because we were actually on their January quarter call in March, and management was a little bit cautious, saying, well, we're thinking web scale is going to slow a bit this year as opposed to last year. At the time, I actually wrote a comment saying, well, I think people are overreacting because the stock sold off on that, but it was only because last year they had a huge 140% growth, and they're just saying it's going to moderate a little bit off that. But the stock just sold off on it. But then it's funny, when they had the April quarter call a couple of weeks ago, they were like, where is this coming from? Basically, they were saying, everything's great. Yeah, it's not 140%, but it's still going gangbusters.
Well, there was a lot of concern around data centers in Q1, right? So is that basically the primary drag there, Robert? Or?
It's actually more called web scale than data. Data centers are part of it, but web scale is sort of just the general umbrella description of it. But there definitely are some pockets of weakness. But what's nice about CIEN is they don't have any China exposure, unlike some other suppliers. So they're not being impacted as much is suppliers who have Chinese customers. So that's a good thing about Ciena. That's one reason I like it. And just overall, I'm just positive on the story. I think people were overreacting to last quarter. This quarter was just a huge beat and raise, and they were really bullish about the second half of the year. So another big positive for them was that these Mexico tariffs were a bit of a cloud over the stock because they have some manufacturing facilities in Mexico. So there were concerns how that would impact them, but now that sounds like it's pretty much out the window, that's another good positive for them. But just overall, just their numbers are just impressive. I'm just surprised that a lot of other tech stocks had huge runs in the first half of 19, but Ciena really hasn't, which kind of surprised me. But they were really putting up some good numbers, and I like the stock. And it actually gapped up in early June, and then it's pulled back a couple points. And I like the story overall. I think it's a good play.
Yeah, I would say this. I would want to see it hold that 42 level, which would be the gap up support. But just taking a look at that weekly, that does look like a pretty good chart. But again, for me, I'm looking at 42. So you don't think it's too expensive up here or anything like that, Robert?
No, I don't. I think it's. I don't have the valuations right in front of me, but I think it was pretty reasonably valued, and it didn't have that huge hockey stick run that a lot of other tech names had in the first half. So I like it. I think it still has some potential in the second half of this year, and I think they're going to put up some really big numbers. Maybe I don't know if it's July quarter and then maybe the next couple quarters. It sounds management was about as bullish of a conference call as I can remember recently, and
that sticks out like a sore thumb given some of the conference calls.
It does.
This past quarter, right?
And another thing they're also benefiting from is because a lot of companies are trying to get away from their Chinese suppliers, and that's benefiting Ciena because they're sort of seen as they're basically a large company, and they have a huge breadth of products that are available, and they're saying that companies they want to go more to like higher quality suppliers, and Ciena is that kind of a company, so they're benefiting from that as well. But just overall, I'm definitely positive on Ciena.
So you mentioned that their customers are Google, Facebook, Amazon, etc. Are they are the FANG names? Are they all 10% customers? Do you know?
That I don't know offhand. Probably not, because telco still makes a majority of their business, telecom customers. So is their non-telco business only maybe around 37% of sales, so it's still not a majority. So I doubt there's any 10% customers in there. I could be wrong about that, but I don't think that there is. So, but they're definitely moving more and more to diversify away from telecom. I mean, telecom is still their bread and butter. It's still an important business for them, obviously, but they're just branching into other areas and doing a good job at it.
Now, do you view Ciena as being a company strength, or is that also the industry that they're in? Is there any peers that you would be looking at?
None that I like.
Okay.
Or that I just know off the top of my head. Ciena, especially as we're going to the 5G build out, I think that they're well positioned for that, and so the telecom business should be fine, and then their non-telecom web scale business should also continue to do well. So I think it's a good combination of businesses to be in.
All right. Next up, we are going to move to Repligen. They are a provider of bioprocessing technology used in the process of manufacturing biological drugs. They had news out earlier today, Robin. I'm going to go out on a limb and assume that was you who did the 1038 write-up, but this would be a perfect example of what they do over at the Briefing and Play Plus team, on the Briefing and Play Plus team, that provides a great value add to the service. So, Robert, you want to run down what the company does overall, and then maybe circle back and we'll go through the news today and why it was important.
Sure. Well, basically what they did was, what they do is they do like bioprocessing. They basically help, the easier way to think about it is that they help biopharma companies and CMOs become more efficient in terms of increasing yields, making their factories more flexible. So they don't actually make biologic drugs. They just help the biopharmas do it better. So there isn't that. What I think about them is there's not that drug risk of approval, non-approval. So they do have exposure to the biopharma industry, but they're not. They don't have that drug, approval risk that a lot of other names have in this space. And just basically, they're just doing great. I mean, they're highly profitable. They had a huge beat with their last quarter, and they're in a bunch of areas like filtration, chromatography. They do process analytics, protein products, that kind of thing. And they see themselves as a disruptor because basically they want to have the best technology so that they're adopted by a lot of the biopharmas. And they said that's how they get us as their beachhead is they get super great technology, and then the biopharmas bring them in to do a whole bunch of different things, and that's how they kind of get in, work their way in. So I do like it, and another reason I like it is I think it's a potential takeover candidate because a lot of they're still really small. They're only about $60 million in quarterly sales this past quarter, so I could see like a huge biopharma just buying them at some point, like maybe even one of their customers like GE Healthcare or maybe MilliporeSigma. I wouldn't be surprised if at some point. I mean, I'm not saying that's going to happen, but it's something that they're of such a small size and they're doing so well that I could see that happening at some point.
Valuation wouldn't be a concern for you here. I see it trading at 69 times forward PE and about 16.8 times price to sales. What would be the best value metric for this, Robert? Would you say?
I think it probably would be price to sales. I mean, because they're it's just
story.
Yeah, but again, it's a small company, so that kind of distorts that a little bit because you're using a really small denominator, so it's going to be a humongous price of sales. But I think that
3.53 billion market cap for anybody.
Yeah.
Wondering.
That area. But anyway, I think that's overall. I think it's just they're just doing really well. And I would probably just that like I'm not a technician, but maybe that support like in the high 60s is a good area as like a support level. But you probably know better than I do at that point.
We'll take a quick look at that. Support would definitely be at 60 area. That's obviously running with a 200-day moving average, but a reversal down there would be a little bit of a concern in terms of a potential false breakout. So I'd be looking at that 68 area as a possible good area to hold it. Now, this is a 42 million float, Robert, with about 8% short interest. So there are some concerns from people out there, I would assume, around maybe valuation, or why would people be shorting this stock?
I probably would be the valuation. I would think would be the main reason. And the stock has moved up in the past couple months from like the high 50s to the 74 area. So it definitely has made a move, and maybe some shorts are coming in at this point. But and one of the things about just the potential I like about it is just that there's a lot of they're also in an area like the monoclonal antibodies, which like fight cancer using the body's immune system, and there's about 85 that are marketed in the U.S. today, but over half of those have just been improved in the last 3 years. So it's definitely a very that space is really booming, and that's great for a company like Repligen. And then they're also in gene therapy and cell therapy, so they're in the kind of the hot areas of where the approvals are coming, and they actually also think that the manufacturing capacity in the areas where they focus are going to grow by 40% just in the next 4 years. So those biopharmas are going to need companies like Repligen to use their products to make those factories more efficient, and so I think they're in a good space longer term.
All right. So we're going to take a look at another piece of news today, Robert, that caught my attention, and I was a little surprised, but you kind of set me straight on where they stand in the industry, and that's the Schnitzer Steel EPS outlook that was provided today. So I was really surprised to see it above where the consensus is, and walked over to you because for those who don't know, Robert cut his teeth on the steel industry as an analyst for Citigroup back in the day. For Citigroup back in the day.
On the sell side, yeah.
On the sell side. So he really knows his stuff when it comes to this space. So anytime I got a question on it, I always go to Robert. Robert, do you want to explain a little bit in greater detail what Schnitzer does? And, if anything, would you be extrapolating anything out on the steel names on this, or what would be your take?
Well, first of all, Schnitzer is kind of unlike most of the other steel companies. They do have steel in the name, but they're actually more of a metals recycler. So they'll buy scrap metal from junkyards, from metals dealers, industrial manufacturers, and basically take all that scrap and then they process it, compress it, and they sell it to Ducor and Steel Dynamics, who use that scrap steel to make new steel. Schnitzer does make steel for itself, but it's primarily a recycler. So basically, when I saw them, have some really nice guidance, it was great for them to have the nice guidance, but I would not extrapolate that to the other steel producers because they're different businesses. They're more of a supplier to a Nucor and Steel Dynamics. So it is, I guess it's positive that their business is good because those other companies are consuming that scrap. But the problem is that scrap pricing has been weak for the past, a while, and it's just kind of it's not the greatest area to be in right now. There's just a lot of scrap out there, so the prices are just not as strong. But so I definitely would not extrapolate this to the other steel producers like AK Steel, Nucor, U.S. Steel. This is kind of like a one-off situation. And also, this company is actually in Portland, Oregon, where the other steel companies are in the Midwest, where they do a lot of automotive, appliance work, that kind of stuff. So there's kind of a different business.
What are you looking for from the steel companies this quarter? Like, what do you think would mark a successful quarter for them in a couple of weeks?
Well, I'd like to see some big numbers, but they're not trading like it. Like, I'm scared because the summer is where they really put up the biggest numbers. It's their seasonally strongest time. But they're trading like it's not going that great. Nucor, Steel Dynamics, U.S. Steel, a lot of them are down recently. So it's, it just definitely, I probably would stay away from the group at this point. There's just not a lot of excitement for me there.
In general, though, your favorite name is Nucor, right? Do you usually feel that they're the best performer? I'm not saying, obviously, you just said to stay away, but if it was to start heating up a little, would that be the first name you'd take a look
Nucor,
at?
I would actually prefer Steel Dynamics because it's smaller.
STLD.
Yeah, and the nice thing about they're called mini mills, whereas opposed to like AK and U.S. Steel are integrated producers, where they make steel from the raw materials like iron ore, coke, and they put it in this huge blast furnace and they make steel out of it. The mini mills take a lot of scrap steel, melt it down, and then they roll out new steel. Mini mills are a lot more efficient because they can start, stop as demand requires, whereas you can't turn off and turn on a blast furnace very easy. It's something that kind of continuously needs to be on. You can't. So there's some costs associated with that. And mini mills also tend to have non-union labor, so that's another reason why they're generally more efficient. So I'm kind of more of a fan on the mini mill side.
Okay.
And Steel Dynamics, and I mean Nucor's great too, but I think Steel Dynamics is a little one I favor a little bit more.
Okay, beautiful. All right, Robert, anything else you would like to add or note before we move forward? Or
No.
before we close out? All right.
No, I think we're good. Maybe next week I'll have some more stuff.
No, we'd love to get you back on a little bit more regular basis here. I know you made a lot of people a lot of money on that Roku early in the year, so kudos on that call. And for anybody that's looking to find any of Robert's write-ups, if you look under the Invested in Trading tab, there you will find the emerging growth. You also post items under the next big thing, right? Where does the yield?
The yield goes under stock ideas. So
under stock ideas, you can find
that's
the
under
yield.
investing and trading, stock ideas. Yeah, so every Wednesday we do yield leaders every Friday, and then value leaders every Wednesday. So that's always but that's just a quantitative scan. Like I don't put any, is qualitative input into that. That's basically just a quantitative scan. So the emerging growth comes out every Monday, and then we give commentary throughout the week. So you can always do a search that way. You can just if you do a Fundex search, that's another way I tag everything as Fundex, so you can easily find a lot of the comments that way.
And that'll be FUND as in dog X.
Correct.
So all right, Robert, great stuff. We'll continue to keep an actually, Robert, do you have a quick second to answer a feedback question?
Sure.
Can you ask Robert current thoughts on steel CMC? I think he had liked them previously.
I did. The problem is I was hoping the infrastructure bill was going to come through. I think I was positive on them earlier this spring, and
Yeah.
it just seemed I was hopeful that the infrastructure bill was going to come through, but it's just I don't know. I don't think it's going to happen before the election. But
Nah,
if the infrastructure did ever come through, this is my
it's
play
the
on it
winner.
because they doubled down on rebar because rebar goes into concrete, it goes into bridges, it goes into and they bought a bunch of assets a couple of years ago from Gerdau, a Brazilian company that has a lot of rebar assets in the U.S. And so basically they were doubling down on rebar. So if that bill ever comes through, I think that's my play on it for sure. I think it'd be a big mover. But again, it's hard to predict the politics of it. I thought that the infrastructure bill was going to come together, and even Trump was saying, "Oh, $2 trillion," which is double what he was saying during the campaign. But now it seems like it's fizzling out. So it's hard to know exactly if anything does happen. That would be my play on it.
All right, and then real quick, LGF.A Lionsgate. Do you follow them, Robert?
No, I do not
Yeah.
often. I may have written them up a long time ago. I haven't really been following them very much.
Okay. No problem. Somebody's asking about them, but I didn't recall you ever really getting involved with them.
No, sorry.
Yeah. I mean, I know it was a name that I liked and Craig liked, but with the idea of the content in there, but they've been running into a number of issues with their Stars brand and stuff, and just haven't been able to get out of their way.
Hmm.
So, all right. Well, Robert, again, thank you very much for joining us, and hopefully we can talk again next Friday.
Okay, sounds good. Have a good weekend. Thank you.
All right. You too. Take care.
Bye.